Hello, ladies and gentlemen. This is Sanford Khan. Welcome again. I'm an economic consultant and business author. The title of this presentation is How to Sell Call Options on Apple Stock, excuse me, to not only boost your income, but to lower your risk. Not eliminate risk, but definitely lower risk. The prices I'm going to be using will be based on the prices as of the close of the stock market Friday, October 2nd. I'm also going to round it off to the nearest dollar. I don't care for using cents. The IRS doesn't bill you in cents, so let's round it off to the nearest dollar. These are actual market prices that I'm using. To refresh your memory, remember what a call is, a call option. A call option gives the owner the right to call away 100 shares. A call is equal to 100 shares of a stock. In this case, it's Apple stock we're talking about. To call away 100 shares of Apple stock within a certain time limit at a certain price. That price is called the strike price. And the price we're going to be using, I'm going to be using the December 18th calls, December 18, 2020 calls. You could go into your stock account, pull up your option pages. This is for online people who do online trading. And they all use the same type of format, basically. And you could go to any month you want. You could go into November, October, and middle of October to November, December, January, February. You can go on to next year. I'm just using December 18th. So let's get into it, okay? This is based as of the prices October 2nd, 2020. Apple finished that day at $113 a share, which was down $4. That's Friday, October 2nd. The 52-week range of Apple stock, the low was $53 a share, the high was $138. So the December 18th calls are 74 days away from expiration from the date October 2nd, 2020. So let's get into it. I'll just give you 3 strategies like I did with Facebook and what I did with Microsoft. Assuming you own Apple stock, it's widely held and they had that split, you're thinking, well, the first strategy will be based on, I think Apple has, I know it's going up a lot, but it could go up a little bit more. So I want to pull some money out of Apple stock, but I don't want to sell my shares just yet. So how could I do it? Well, let's go, it's finished at 113 a share, like I said. So let's say you want to sell a December, I'm looking at my notes here, a December 120 call. It gives somebody the right to call away one call. So call away 100 shares of Apple stock between now and December, what did I say, December 18th at $120 a share. They can do it any time in that. They won't do it, obviously, using your brains, savvy investor, they're not going to do it unless Apple gets above 120 a share. Why call away 120 if it's below 120? So, but you're going to sell somebody that right to call 100 shares of Apple away at $120 a share between now and December 18th. How much will you get? Based on closing prices of October 2nd, you'll get $700 immediately into your account. That's $700 cash. That's your money. That's called premium. That's your money to keep and do whatever you want to do. Go to a nice restaurant, take a weekend, a vacation somewhere, you name it, you could do it. Okay, it's your money, but you're selling them the right. Also, for tax purposes, I'm not a tax guy, but having done this for a long time, that's also considered ordinary income. So that gives somebody the right to call 120 shares away from you, 100 shares away at $120 between now and December 18th. I'm not recommending this. I want you to get that straight. I'm not recommending this at all. This has to be suitable for you. And if you own quite a number of shares of Apple, you may wish to experiment doing it on 100, 200 shares. One calls 100, 2 calls is 200 shares. And just see how it works out for you. See if it's suitable. But I know this from my own experience. What isn't suitable for you now can and might be suitable for you down the road, because that is how it's worked out for me. And I'm not that much different than you. Okay, let's get on with it. So let's say you're thinking, well, Apple closed at $113 a share. Maybe it has a little bit more upside potential, but I do want to protect myself somewhat, and it could stay in a narrow trading band. In other words, it could go flat, not a straight line, but a narrow trading band. So it closed at $113 a share. Let's say, okay, I'll give it to 115. That's $2 more per share. So how much will I get if I sell somebody the right to buy 100 shares of Apple stock from me between now and December 18th at $115 a share? Don't forget, it won't be exercised unless it goes to 115 and above. For that right, you'll get $895 cash into your account based on prices again, October 2nd. Closing price. These are, by the way, closing prices. October 2nd, 2020. You'll get $895, close to $900. That's not bad. That's not bad at all. Oh, I have to give a disclaimer. I completely forgot about this. I do not own any Apple stock as of the date of this presentation, both in my trading account and in my self-directed IRA account. I'm just using Apple because it is a popular stock, so I figured I'd use it, and I know it's widely held and a lot of individuals own it. So that's why I'm doing this. So you'd get close to $900, $895 to give somebody the right to buy 100 shares from you and $115 between now and December 18th. That's not bad. You could take a nice weekend vacation with $895. At least I could. I know some nice places to go that aren't expensive. Now you could say to yourself, well, I think Apple could go down a little, but I want to protect. I don't think it'll go down a lot, but I think it'll go down a little. So this is the thinking you're going through your mind, okay? So what I want to do is protect myself on the downside. You say, I'm going to sell somebody the right to buy 100 shares of Apple stock from me. If you have 200 shares, you wanted it to be 200 shares, that'd be 2 calls. 300 shares, 3 calls. Anyways, I want to sell somebody the right to buy 100 shares of Apple stock from me between now, October 2nd, and December 18th for $110 a share. Don't forget it closed at $113. So how much will I get if I sell that right to somebody at $110 a share? You'll get $1,140. $1,140 for 100 shares. That right. That goes cash into your account. At $110 and the selling at $113, that's called an in-the-money call. And it will be exercised if Apple stays at or above $110. But you're getting an extra $11.40 per share. I divided that by 100. $11.40 per share. That's equivalent to a price of, high math here, folks, $121.40. $121.40. I add $11.40 to 110. That's $121.40. This is very high math here. So, and don't forget I finished at 113. So you're still ahead in the game, and you're giving yourself some really good downside protection. So these are just strategies. Do it if it's only suitable for you. But you may want to try it on 100 or 200 shares, assuming you own quite a few shares of Apple. If you own like 400 or 500, try it on 100, 200, and just see how it works out. What do you have to lose? This is cash in your pocket. Don't forget, this is all ordinary income. So you do pay taxes on it, but you get the cash up front. You pay your taxes down the road. So that's money you could use now for expenses, to buy other things, maybe other stock or whatever, maybe some penny stocks or whatever you want to buy. Anyways, I'll do a few more of these. I'm thinking about doing one on Tesla. No, that's going to be interesting. The premiums on that are just through the roof. Anyways, until we meet again, remember, a secure future for all of us lies in economic growth. Take care now, and I'll see you soon. Bye now.